As per our Global Capital Confidence Barometer that was launched today, there were some intriguing findings there when we compared global to MENA and vice versa, MENA to the Saudi market. And what we found in terms of the key takeaway is actually the appetite for businesses to pursue an acquisition with cash. And in Saudi Arabia, it was a profound 93%, which is phenomenally high due to the liquidity of the market. And the capital available for businesses to spend, both listed entities and their family business sector, means that we're really seeing opportunistic M&A opportunities outside of the kingdom. So Saudi businesses are aggressively looking domestically within the region. So the other GCC nations where there could be fair valued assets for sale, particularly in the consumer product space and financial services sector. And real estate is a regular one that comes up time and time again as always holding good opportunities. From a MENA perspective, the ability to fund by cash was slightly lower. It was 75%, still phenomenally higher than compared to the global level. However, the good perspective here is that access to credit seems to be improving. Again, liquidity is still strong, but some markets such as the UAE do have higher debt issues than the likes of Saudi Arabia. So I think overall the liquidity and the cash position should really prompt more M&A activity. However, in the backdrop we have this overhang of uncertainty, which sometimes does cause an element of our clients sitting on the fence and adopting a wait and see approach. The one that really stood out, which doesn't always resonate with people concerning IPO, is that they always think about pre-IPO, but one of the key takeaways today on the panel was when the representative from Tadawul, the Saudi Stock Exchange, mentioned the post-IPO support available, so continuing that equity story post-listing. So it's not just when the bell rings on the day, but the journey 1 week, 1 month, 1 year and a decade down the line, that continued support where they're there on standby to help them with their investor relations program. That was one of the main takeaways. I think the second one was that some of the stigma behind the challenges, and in this part of the region, transparency is one of the key stigmas for the family businesses because they're not used to disclosing all of their financials and information. But I think it was very profound that the benefits by far outweigh the challenges, which means that access to more liquidity, the branding benefits of it, and the credit rating benefits of it, I think led the delegates to also feel a little bit more that the stigma of transparency is not a fundamental blocker on this.